Hi, Scott Nelson, Senior Wealth Manager with Boulay Financial Advisors with your review of the markets for the third quarter of 2022. Starting with the bond markets, we see that it was another down quarter, and that is largely due to the Federal Reserve's continued hiking of interest rates. Overall, the U.S. bond market was down 4.2% for the quarter per the U.S. Aggregate Bond Index, and that index is now down over 13.5% for the year. Government bonds did slightly better than the overall index, while corporate bonds did slightly worse. High-yield bonds fared better than the others, finishing down just over 1% for the quarter. Again, I want to highlight the continued remarkable ascent of the 2-year Treasury bond over the past year. It's climbed nearly 4%, eclipsed the yield of the 10-year Treasury bond in July. It's now yielding about 0.5% more than the 10-year. This flip in yields, with the 2-year Treasury yielding more than the 10-year Treasury, is referred to as an inverted yield curve. It's an indication that investors are more concerned about inflation and the economic slowdown in the near term and less concerned about what will happen in the long term. U.S. stocks started the third quarter with a strong rally, but the Federal Reserve's interest rate hikes in the quarter let the air out of the rally and led to another down quarter. Overall, the U.S. stock market was down 4.6% for the quarter per the Russell 3000 index, which is now down 24.62% for the year. U.S. small caps actually did a couple percent better than the large caps per the CRIS small cap and large cap indices. Market watchers attribute it to expectations that the strong dollar will lead to weak international sales for big multinational companies. Speaking of international, many foreign central banks followed the lead of the Federal Reserve in the third quarter and raised interest rates to contend with their inflation issues. This led international stocks to be down 9.91% for the quarter per the MSCI All Country Index. The Chinese government continued its fiddling with the Chinese economy, and that pulled Chinese stocks down over 20% for the quarter, which in turn led the MSCI Emerging Markets Index to be down 11.57% for the third quarter. Nobody enjoys watching the markets go down, but down markets don't have to be all bad news, particularly if you're an accumulating investor looking to build your wealth for the future. Many solid long-term investments are available to accumulating investors at a discount in down markets. Don't pass up this opportunity. And along the same lines, doing Roth IRA conversions during a down market can also reap long-term rewards that will be tax-free forever. At Boulay, we also see down markets as a good time to adjust those client portfolios that came to us clogged with long-term holdings stuck there because of big taxable gains locked inside. Down markets offer us the opportunity to adjust those portfolios to better match clients' risk tolerance and long-term investing goals with less of a tax sting. At Boulay, we employ gain reduction trading strategies, realizing an acceptable amount of gain to the client now to better position these portfolios and reduce the likelihood of having to realize a large taxable gain in the future. One strategy that we do not recommend, though, is selling out to cash with the expectation that one can jump back right in when the markets begin to go up. It never works. The markets are always a step ahead, and days with big market rallies always get missed by investors who wait until they're sure the coast is clear. The best strategy is just ride it all out. Well, that's the market situation as we close the book on the third quarter of 2022. As always, remember, if you have any questions about your portfolio, don't hesitate to reach out to your Boulay financial advisor. Also, a reminder that Boulay is moving its Eden Prairie office down the street to 11095 Viking Drive. We hope to see you there soon. Thank you. Hope you have a pleasant autumn.